Welcome to The Explainer, where we break down big ideas. And today, man, have we got a story for you. It's the origin story of a trading legend, a guy whose early wins and, more importantly, his catastrophic failures laid the groundwork for one of the greatest speculative careers in history. So, we're diving into reminiscences of a stock operator. This is basically the fictionalized biography of the legendary speculator Jesse Livermore. And get this. It was written way back in 1923, but traders today still treat it like a Bible. Seriously. So we're going to look at those early chapters and figure out, what's the magic here? Why is it so timeless? All right, so our story doesn't start where you'd expect, like on the floor of the New York Stock Exchange. Nope. It kicks off in these smoky, kind of semi-legal gambling dens from the late 1800s. These were places that were really operating on the fringes of the financial world. So what were these places? They were called bucket shops. And you can basically think of them as casinos for stocks. See, you weren't actually buying a piece of a company. You were just placing a bet against the house on which way a stock's price would tick next. The action was super fast, the bets were small, and yeah, you guessed it, the house almost always won. So our guy Livingston gets his start here. He's just 14 years old, working as a board boy, writing stock quotes on a big chalkboard. But here's the thing. While everyone else just saw numbers, he started seeing patterns. He realized that stocks kind of had tells, They behaved in these predictable ways right before they'd make a big move, up or down. So he starts keeping this little notebook, just jotting down his predictions. And you know what? His system worked. It was unbelievably effective. One of his coworkers talked him into placing his first real bet, and from there, he was off to the races. By the time he's 15, he had turned his tiny wages into $1,000. And back then, that was an absolute fortune for a teenager. So yeah, he wasn't just good. He was a phenom, a prodigy. And pretty soon, the bucket shops just couldn't afford him anymore. I mean, he was so good at beating the house that the house literally refused to play with him. They all knew his face, and one by one, the doors just started slamming shut. So Livingston figures out pretty quick that he's outgrown the local scene. I mean, where do you go when you're banned from every casino in town? At 21, with a growing reputation and a decent chunk of change, he decides it's time. Time to take on the main event, Wall Street. So he lands in New York, right? He's got $2,500 in his pocket, and he is feeling unstoppable. He's completely sure that the same system that made him a legend in the bucket shops is about to make him a king on Wall Street. But Wall Street was a completely different animal. I mean, a whole other beast. His entire system, which was so perfect for the bucket shops, was built for a game that just didn't exist here. On a real exchange, there were delays, there was price slippage, and for the very first time, his own trades were actually big enough to move the market. He was no longer just a spectator. And this was the fatal flaw. The ticker tape, which had been his absolute Bible, was only telling him what had already happened. In a fast market, that tiny lag, that split second between seeing a price, yelling sell, and the order actually getting filled, that was everything. It was the difference between making money and losing it all. And his perfect system? It failed, big time, spectacularly. His whole method of just scalping these tiny instant profits was totally impossible in the real world. In just 6 months, he was wiped out, flat broke. Okay, so he's down, but he is not out. Livingston knows he has to get back in the game. But to do that, you need a stake, right? You need money to make money. And there was only one place he knew for sure he could make cash fast. So he hatches a plan. He borrows $500 and heads to St. Louis, which was famous for having these big, rich bucket shops. It's like a comeback tour. He walks into the first one, and get this, in just 2 days, he turns that $500 into $2,800. But then, they figure out who he is. The owner literally pulls him aside and just lays it all out. He says something like, "Listen, kid, I've got 300 suckers in there. They feed my family. You come in here and take more in 2 days than I get from them in 2 weeks. Get out." So he gets the boot, tries another shop, can't even get in the door. His reputation had gone national. So with just enough money to give it another shot, he heads back to New York. All right, so he's back on Wall Street. He's got a fresh stake and a really, really painful lesson under his belt. He starts to adapt, to change his game. But he's about to face the ultimate test of his old ways, during one of the most violent, chaotic market panics in history. And this brings us to a huge question, a really important one. Can you be 100% right about the market and still lose everything? Because Livingston was about to make the single best market call of his entire life up to that point, and it was going to bankrupt him. So what happened? It's May 9th, 1901. There's this massive fight for control of the Northern Pacific Railroad. Two of the richest groups on Wall Street are going to war, and it's creating absolute chaos. Livingston sees it all coming. He knows deep in his bones that the market is about to have a spectacular crash, and he positions himself to short the market, basically to bet on it going down. And by this point, he'd patiently, carefully rebuilt his account to almost $50,000. This is the most money he's ever had in his life. He's convinced he's on the right side of the trade, and here's the crazy part. He was. He's watching the tape, just like always. He sees the prices start to crater, and he tells his broker to sell. He's executing his plan perfectly, based on the info he has. But the market was in an absolute free fall. The ticker tape, the machine printing out the prices, it just couldn't keep up. It was running minutes behind what was actually happening on the trading floor. So when he saw stock at 100 and sold, the real price, when his order hit, was already down at 80. And just like that, in an instant, he was wiped out for the second time. Think about that. He was 100% right about the crash, but he was totally ruined because his entire strategy depended on acting on what was, essentially, old news. Losing everything for a second time, and in such a dramatic way. Well, that was the final, brutal lesson he needed. It wasn't a choice anymore. It forced him to completely rethink everything he thought he knew about playing the market. And this failure, this is what really marks his transformation from a tape reader to a true speculator. He finally got it. He couldn't just react to numbers on a screen. He had to learn to anticipate, to understand the bigger picture, the real-world conditions driving the market. He learned that the game wasn't about being right on the next tick, but about being right on the next big move. And maybe the biggest lesson of all, the enemy isn't the market, it's your own bad assumptions. You see, those early, incredibly painful failures, that was the price of admission. That was the tuition he paid to become a Wall Street legend. They taught him that the perfect system for one game can be the perfect recipe for disaster in another. And honestly, that's a lesson that every single trader, from his day to ours, has had to learn for themselves.